8 straight days of green candles, the longest win streak in nearly 2 years. Some call it exuberation, others might call it manipulation, and on this channel, we call it opportunity. We saw opportunity and we pulled the trigger, but where does that leave us now? With a distinct lack of breadth across the market, volatility absolutely crushed, and dark pools starting to light up, today we answer the question, how much more do we have? Hello ladies and gentlemen, welcome to the daily recap show where we talk about stocks and the financial markets. If you like this video, please subscribe, hit the notification bell, let's get into it. And it was another marginal green day for the market. While breadth did improve slightly, it was still the big names, technology, comm services leading the charge, moving the market. And this is capping off 8 straight days of gains. And the S&P 500 has had its longest rally in the last 2 years. And I went ahead and put this on X here. So the S&P 500 is up 8 days in a row, 0.1% today. The 2 previous 8-day win streaks saw stocks up 0.09% and 0.1%. And the S&P 500 hasn't been up 9 days in a row since 2004. Could happen tomorrow. So we are approaching some very historical dates here with this massive run we've seen. And the thing is, it all has to do with yields. Yields continue to underpin this market. We saw the long end from the 5-year to the 30-year fall. We did see a bit of weird action here in the 6-month to 3-year. And then on the much shorter end, the T-bill end, they fell as well. But all in all, yields did move lower. And especially if you look at the 30-year, down 0.12%. The yield now at 4.6. Just 2 days ago, it was at 4.85. And this is what normally happens after the Fed stops raising rates. I have some data here for you. And this is the last Fed hike. Many people are of the assumption we just had our last hike. Normally 1 month after the Fed has its last rate hike, we see some very moderate action. Yields are down, sometimes they're up, but we could see the further we go down into the 12-month period, yields come down as far as 117 basis points all the way up to 224, and this is 2.24%. That's a lot. Imagine the 10-year was to go from 4.7 all the way to 2.5. Absolutely crazy. And this is what happened in 1984. And if we look at the actual averages, it's sort of around the 6-month mark, anywhere from about 80 to 100 basis points, and all the way at the 12-month mark, you're stretching as far as, again, 100. But if you look at it individually, you could see here that, 195, 200, 119, 165. So anywhere in the region from 100 to 200 basis points is where we could see yields lower in the next 12 months. And what does that mean for the S&P 500? You could see here that after the final Federal Reserve bank hike in a tightening cycle, 1970 to current, we normally average a 14.3% return after 12 months. And this coincides with about 1 to 2% drop in rates in the following 12 months. But this is many among other reasons why I was bullish, and smart money was also buying. You could see all of these factors coming together. Rates decreasing, smart money buying. Smart money is always on the right side of the trade, and they were buying as we were dipping from August to October. And also earnings. You could see here that the S&P 500 has reported earnings growth of 3.7% this quarter. Now the Q3 2023 earnings beat data is here, and 68% beat rate. It was 71% just last week, but we did have some of the hyper growth names, these smaller stocks, these credit dependent stocks in the S&P 500 report, and that's probably why we've dropped. You can see 1680 beats, 794 misses. But are we finally out of the earnings recession? And according to this data right here, FactSet, we are. We had an earnings recession from Q4 2022 to Q2 2023. And based on consensus estimates, which is this, we should see earnings increase 4% next quarter, just above 6%, and then 10% in Q2 2024. But what about sentiment? Have a look right here. 50.3% of members were bullish into the 1st of November, and you can see here that the 1-year bearish high is 52.3% right at the end of 2022. And if you had put your money in the Nasdaq, you would be up about 41% year to date. Quite the return. But on the topic of sentiment, I saw this poll on Twitter, and it's, what can the broad drop in commodity prices mean? We've seen a particularly strong drop in oil, especially in the last month. A lot of people think it has to do with growth concerns. And I think I'm going to cover this. And I think I'm going to cover this in my weekend video, commodity prices, recession, and where the economy currently is, because there's a lot of moving parts that a lot of people just don't seem to digest. And I'm going to break that down for you. So stay tuned for the video on Saturday, guys. But let's move on to seasonality. And this is a very, very interesting chart. And this is the 30-year bond yield from the 6th of November to 26. In the last 40 years, the 30-year bond yield in November actually moves lower. 30 down months, 10 up months. So generally speaking, this is why these seasonal factors come into play. Seasonality is not a mystical thing. There's structure behind it. Yields down, stocks up. And this is why November and December is one of the best months of the year. And we can see here that the average basis point change down nearly 10 basis points. And this is why, again, I repeat, we often see a bullish November, especially in years when we've seen a positive year to date, but a negative August to October. We normally return upward of 5%. And if you actually break it down individually in the stats, you can see we get November and December upward of 10%, 6%, 11%, 14.87% in 2020. And these are just some individual outliers, but the average is about 5.04%. And a lot of this gain in November and December comes in the latter half of the month. Have a look right here. The most bullish time in November is sort of from the 16th onwards, and the same is true for December. Sort of from the 15th onwards, we see a very, very bullish period in December. But this is the trade plan we've been following lately, guys. We were to buy at the 4150 to 4125 area, and let's hop on the charts right here. We look at this every single day because we have to. This is what we're trading. Now let's hop on the charts here, guys. We look at this every single day, and we have to because this is what we're trading. So this is the year-to-date chart. We said buy here on the 26th. We bought, and we've been holding this all the way to the top. I did say take some profits up here because we are seeing some very trepid action, but there's a reason for this, and I'm going to show you guys why. We are in a very high gamma zone. The 4400 is a very high gamma zone, as well as the 4450 area, and this is why I've moved my price target from 4436 to 4450 and above. If we get above here, we probably go a lot higher, and all of this data was based on this right here. This is some gamma data I have for the SPX. So the 4400 area and the 4450 area are extremely high zones of gamma. And if CTA flows on the SPX are unchanged, they next trigger a price at 4440, right at the core resistance level. So sort of in between this level and this level is where CTAs will trigger. And if we break that level, more liquidity coming in from systematics. And this is why I say the area now we need to break is the 4450 area. We need to get above this extremely high gamma zone, get above this zone right here. We get to 4440, and these CTAs who are now short here are going to end up buying, adding liquidity to the market, adding fuel to the fire, and that fire is our bull run. But let's hop into dark pools as well. Very interesting stuff came through on dark pools over the last couple of days. The QQQ, we said we saw the 49th biggest trade since inception show up right here, and we had this huge rally. Still no trades, no big trades coming in at the top of the NASDAQ run, which means a lot of these guys are still holding. They still have a lot of conviction in their longs. Moving on, the Russell, the IWM, hasn't seen quite the momentum the Qs have, but you have a look right here, the 87th biggest trade since inception. That's a pretty big trade. Came in on the day, as well as another big dark pool trade. This was a lit exchange trade as well. So similar to what we saw with the QQQ right here, we could see something happening with the Russell. And if we do see the Russell move higher into the end of the week, into November, don't be surprised. It could just be a broadening out of the market. But thank you so much for everything, guys. If you like this video, please give me a like, leave a comment, share this video, subscribe. You know I love you guys.